Hi, good morning, folks. Happy Tuesday. Hope everyone's doing all right. We are getting into US CPI. So, as mentioned yesterday, that will be the key point that traders have been pretty much trying to price in because the headline inflation is expected to soften from a prior 8.5% reading to, we're expecting 8.1%. That is the consensus anyway. Pretty much explains why we're seeing this pullback from 20-year highs on the US dollar. And mind you, this is the US dollar index. This is paired against, if I'm not mistaken, 13 currencies. So when this goes up, it kind of explains now, if you understand how it affects all the other currencies and why you think, oh, why is the yen getting slapped around or stuff like that. With this, do it with the US dollar pulling back over here. We were talking, not we, more like our head of trading did mention a euro play. If you take a look at the channel that I mentioned yesterday, so we broke out this more nearer term resistance, broke through. Now we've traded above, closed above yesterday, and then now continuing on. Look at that, to the tick, beautiful stuff, right? So if this breaks out, closes above here, then it could be an impetus for a longer term long play on this euro over here because the ECB has come out hawkish, right? So this is the ECB, and but key point here is the US CPI. Apart from that, we do have at 10 o'clock London time. German ZEW, but that is pretty much, we're not expecting too much out that. It is an important data point moving forward just to take into context, but if you're expecting, fireworks, probably not. Okay, so that is on the euro, a nice breakthrough. So we'll be looking at this. What we were mentioning yesterday, if the numbers come in not to say accidentally, it's more surprising if it surprises markets to the upside. If it comes out hotter than 8.5%, we talked about this, and that video is on basically this YouTube channel. You can check that out. I'll put a link as well in my Insta, the usual Insta linkage that I've been doing. But apart from that, that is pretty much it. Oh, okay. So OPEC is also releasing their monthly report today. So I'm not too fussed about crude at this moment in time. Very interesting how the 85, like look at that level over there. Very interesting how, we dipped below, came back up, and then saw some buying, support came in, and then we are holding above that line over there. So after the meeting, we'll see what OPEC thinks about, where, oil demand is going to go into moving forward. Obviously, so Goldman Sachs today says they predict that even after the 20th Communist Party in China, they still expect China to basically keep that COVID zero policy, which means that could potentially, be spooking markets in terms of demand key here. But infrastructure wise, they are trying to push towards a quicker and accelerated spending in terms of infrastructure, which is why we've seen, copper prices rising. But in terms of crude, this is more like a global thing. So if China's under lockdown, and they're not buying stuff from other people, so other people can't sell the stuff that they make. So that is the layman's term of how to sort of like explain why China is an integral part of international trade. But that is a down the line situation. All eyes right now on US CPI, and this will then tell you whether or not the US Fed has to remain hawkish or not. On the Stixie here, pulling back 107s, I feel should hold, but if the inflation print comes in hotter than expected, I do think we will get a renewed rally. We will see this trend line holding, but with a renewed rally, we might get a quick dip to test this level here. It does look like that is what it wants to do, to find the buyers around this area here. Perhaps a bit of capitulation, see some buying going on, hold that level, and then continue on with that rally. So that is it from me today. Any questions at all, you can pop me a message on via Discord. Um, this is Rick bringing you today's daily briefing. Have a good session ahead and keep your Powder dry, people. All right, catch you guys tomorrow, later or tomorrow. Cheers.